Hey everyone, Extreme here. What happened? The biggest market dump ever. Over 50% since its all-time high. But let's see what's in the news. There's some indication of what happened. There's indication of new regulations that might come in. And then it's good news with a price prediction of a well-known name. But let's see what's happening. Market wrap. Capitulation city as Bitcoin dumps to 31,000, ETH to 2,000 before reversal. Liquidations. Yes, a lot of people lost money, leverage trading. China and even Elon Musk may be factors in markets falling. Yes, there's a lot of news about Elon Musk and Tesla and the fact that he doesn't have his facts. And then China banning crypto, or was it just FUD to push the price down? Massive sell-offs across global crypto markets. What to know? Bitcoin tumbles 40% from its April record high of 64, with Ether and other altcoins following it deep. An unusual confluence of bearish fundamentals caused all cryptocurrencies to fall Wednesday, but traders seem to be scooping up cheaper crypto, sparking something of a rebound. I agree. The guys and ladies who invested long term would have bought cheaper, dollar costing average down. The main losers might have been the leverage trading that got liquidated, unfortunately. Bitcoin trading around 39,460, down 8.7% over the previous 24 hours. Bitcoin's range in 24 hours, $31,926 to $43,602. Ether trading around $2,609, losing 23.1% in 24 hours. Ether's 24 range, $2,089 to $3,447. With these low prices was an ideal opportunity to scoop up more asset. Did you? Hit the like button and show us who bought more crypto yesterday. Well, I did. Cascading liquidations. Unfortunately, there was a lot of liquidations. Hundreds of millions people lost by this massive dump that occurred while there was a lot of long trades opened. Bitcoin, the world's largest cryptocurrency by market capitalization, was in the red Wednesday by 8.7% as of press time. Bitcoin was above the 10-hour moving average and below the 50-day, a sideways signal for market technicals. The total drop for Bitcoin in the 24 hours was 26.7%, going from a high of 43,602 around press time to as low as 31,926. According to CoinDesk 20's data, Bitcoin has recovered somewhat from that low at 39,461 as of press time. So it's just about 10% away from reaching where it was, meaning it's rebounding and new people is buying even more. Bitcoin has fallen almost 50% from its high on April 12th, said Zachary Friedman, Chief Operating Officer from Global Digital Assets. Now the crash caused more uncertainty, as we can see here. Crypto crash sees legislators mulling new regulations. The US regulators are growing concern in a week that has been Bitcoin's lose a quarter of its value. It did lose a quarter, but who took the opportunity? US regulators and lawmakers may be revisiting legislation for crypto assets following a wild week of trading that has seen Bitcoin prices plunges by $15,000 at one point. According to a May 20 Bloomberg report, Washington's financial regulators are still unsure of how to regulate these volatile markets, as banking regulators testify on Capitol Hill on Wednesday. The Federal Reserve Vice Chairman of Supervision, Randall Coles, spoke on a lack of sufficient regulation, stating, "We are in a process at the Fed of studying the various ways to address this issue. I don't see it being an easy way." He added the federal agencies need to consider the right regulatory approach before they can then create a framework for oversight. U.S. authorities are still primarily concerned with the illicit activities associated with decentralized digital assets, such as market manipulation, money laundering, and a growing trend in ransomware attacks. Texas Democrat Al Green implored calls to offer ideas on how Congress should regulate the market, declaring that this is a serious issue. We need your expertise. Bitcoin and cryptocurrency markets are volatile by nature, and a large correction of this magnitude have been the norm after such rapid descents. However, financial regulators appear unnerved by this latest route. Acting Comptroller of the Currency Michael 𝙏𝙲𝙬𝙧 said he and other regulators have discussed setting up an interagency task force on crypto tokens. Meanwhile, Senate Banking Committee Chairman Sherrod Brown separately voiced concerns over the volatility of the cryptocurrencies. Yes, cryptocurrencies is volatile, but look at the amount of Bitcoin that's available. It's between 18 and 19 million at this current stage, with a max of 21 million. The less coins there is, the more volatile the price is going to be. Look at the stock market. How many shares does those companies have? The more shares, the less volatile it's going to be. It tells me that fintech companies and other operating outside the regulatory system can pose a danger. I don't know the solution yet with these, but it's cause for concern. In a May 19 letter to Acting Comptroller of the Currency Michael 𝙏𝙲𝙬𝙧, Brown expressed concerns about the OCC's authority to grant charters to financial and non-financial companies. He especially mentioned crypto companies Paxos, Protego, and Anchorage, which were granted national trust charters under previous head Brian Brooks, who left the OCC to join Binance. Sherrod accused Brooks of favoring crypto companies, stating that a firm that cannot meet the rigorous requirements applicable to other banks should not be allowed to present itself to the public as a bank. He recommended that the OCC recess any conditional national trust charters and hold the approval of any additional charters to non-bank entities. Earlier this month, Securities and Exchange Commission Chairman Gary Gensler advised lawmakers on at least one change that he thought they should make, which is granting the SEC clear authority over crypto exchanges. Give them authority? In what way? What does he mean by that? Commenting on the highly speculative nature of Bitcoin, Gensler stated that it could go to zero or it could go high, and that's the nature of it, adding that there is currently a gap in the system with regards to regulation and investors' protection. So now we saw a dump and we saw regulation trying to get another foot in the door. But ARK Investments, Cathie Hood, says Bitcoin will go to $500,000. Hood made that prediction even as the leading cryptocurrency tumbled at Wednesday. With the markets tumbling, she still believes we're going to see a $500,000 Bitcoin. I sure hope she's right, because I won't mind $500,000. Would you? If you agree, hit that like button. ARK Investments Management CEO Cathie Wood said in a Bloomberg TV interview that Bitcoin will go to $500,000 despite the largest cryptocurrency plunging to a low of almost $30,000 on Wednesday. Wood said on Wednesday that Bitcoin is on a sale now, and she said that even after today's drop, the cryptocurrency is not necessarily at the bottom. She describes the market as emotional and says it's difficult to call the bottom. Bitcoin fell for a fifth straight day, putting the largest cryptocurrency on track for its worst month in more than 3 years. During the interview, Wood briefly addressed Tesla CEO Elon Musk's environmental concerns on Bitcoin mining, explaining that the adoption of solar energy in mining will accelerate dramatically. I agree, go with solar, because I still disagree with Elon Musk. Wood said the prospects for Bitcoin exchange traded fund approval in the US this year have now increased because of the decent plunge in price. The odds are going up now that we have had this correction, she said. At press time Wednesday, Bitcoin was changing hands at around $40,753, a steep drop from the cryptocurrency's all-time high of $64,829 set in April. Earlier this month, Wood announced she had joined the board of 𝙏𝙗𝙖𝙣 Holdings, the parent company of 21 Shares, a Swiss-based firm that offers exchange-traded products that give investors an easy way to gain exposure to crypto. A $500,000 Bitcoin price? I'm sure all of us like that idea, and hopefully we'll see it in our lifetimes. Hit that like button and have a great one.